Ladies and gentlemen, K Kim here. Welcome to the market update. Hope you guys had a good day trading today. Today's Friday. Market tumbled a little bit today. S&P is down about 1%. Nasdaq got hit a little bit harder, close to 3% down on the Nasdaq. We did see the small caps though, they were green today. I think the banks were green, slightly green. Well, it looks like S&P and the Nasdaq is down 1% and 3% there. Vixx is up a little bit. Gold pretty much flat there. Bitcoin is also flat. So I think, what I'm going to try to figure out in this session with you guys tonight is, we talked about on the last night's video, on the daily video, that buyers are gaining momentum and that we are at that make or break level. And we're still at that make or break level, right? So we're going to talk about that. So I think we're going to try to figure out, is this market is preparing to make new lows, right? Or is this kind of that, short-term higher low before entering back to the top and get back to the new all-time highs level once again? We're trying to answer that question today in this video. It is all coming up right now. So I'll come back to this daily chart, but I want to follow up with what we've been talking about on the daily update videos this week, right? So basically the daily update videos are Monday through Thursday, right? In which I go through pretty extensive detail analysis, looking at the 65-minute chart on the S&P Monday through Thursday. What I do on Friday, though, is I'll go through kind of more longer term market recap. So we'll look at daily chart instead of 65-minute chart. We'll look at Spider and Qs. We'll look at also Vixx, and we'll look at gold and Bitcoin. But I only look at these on the weekend video. On the daily video, Monday through Thursday, I only look at S&P 500, 65-minute chart. So that's the difference. But on the Friday night video, I would also do a follow-up on the 65-minute chart, and then I'll flip back to the daily and we'll look at that. So first of all, let's talk about the price action that we saw today. So out of nowhere, right? That's what we call a shenanigan gap down. Just out of nowhere. Everything seemed to be, looking pretty bullish, and then just boom, we gapped down about 1.5%, 1.6% this morning. And, with that, market did come down and retest this level. This pivot is important. We've been talking about this pivot this entire week. And I also talked about it yesterday, pretty much throughout this entire week, that buyers must protect 330 level. 330 cannot be broken, right? So yet again, we buyers were able to protect it for now. So this is already, there's a first time there, and this is a second time, right? That buyers are protecting. This is important pivot, right? This is very psychological pivotal level. That was a prior support, and then prior resistance, and then support again, and another support today twice. So it looks like we gapped down heavily, 1.5% there. Very, very fast accumulation the first hour. Second hour, we faded a little bit. Third hour, we came all the way back down to the lows for the day, but brought it all the way back up on the third hour. Fourth hour, we start to stall. And I tweeted out this morning that this gap is going to make things hectic, because you can see how that, you can see how we're not able to fill that gap. You know, so that's why these gaps, it's very important we track gaps. At least you're wondering about those short-term market movements and levels you want to look at. Gaps are very important. It is no coincidence that we found support here twice this week, even despite the fact that we had about almost 2% gap down and how fast we saw that buying pressure in the first hour. And then you can see on the third hour, bulls trying to get up, not even, and it would have been better. See, it would have been better for the buyers fill this gap tonight or today, and then going into next week, maybe, you know, something like that. But this gap remains open. That's going to make things hectic for the buyers going into next week, unless you see the buyers going up, filling this gap pretty quickly or just gapping it up. But anyway, that's the third hour, fourth hour. We fizzled there. That's the fifth hour, just below that gap area. That's a micro-term resistance there. And then you can see sixth hour, bulls are just giving up at this point, just kind of not able to push higher. It managed to close above 50% above this body. That's a long, you know, kind of like Maru Bo's a strong candle. And we closed right, you know, not able to get, it didn't close below the 50% of that body. That gives you a little bit of bullish buying pressure going to next week. Gives a little bit of an edge. But right now, you know, we're just kind of like right in that area. And bulls and bears are battling at this point. And it's difficult decision right now. So, going into next week, if I label this market, still I want to be neutral to bear, and it's the same labeling as yesterday. So I still want to be neutral to bearish in the midterm. I still want to give it bullish in the short term, despite the fact that we did see a down day today, and we did see a big gap down. Because the 331 is still holding, and there's a lot of buying pressure on that first hour. We held above it, the 50% of that body, of the candle body. So let's check out that oscillator. So one of the more concerning signal here is that buyers were not able to find support. See, buyers were not able to find support. We also talked about the potentially bearish divergence here. So we got like kind of like half and half going. We have that bearish divergence. We talked about, you know, sometime this week. There's that bearish divergence there. We're not seeing a whole lot of selling, though we are seeing some struggle here from the buyers. And this is kind of, we pretty much flat this week. I mean, well, we're positive for the week because this is where it closed last Friday. So we gapped up and we're holding above that gap. So all the move already happened on Monday morning and pretty much all throughout this week, Monday, Tuesday, Wednesday, Thursday, Friday, just did nothing. We went up, came down, went up, came down, went up, came down. That's all it did. So whatever the gain it had on Monday morning, right, on the futures market, that gap is pretty much the gains that we had for the week, all week. So we're kind of like, okay, so we do have a bearish divergence, but bears are not truly materializing it, right? So we are kind of still seeing the price moving sideways while the oscillators are getting what? Reset. Again, it would have been better for the buyers if they would have found support here. They didn't. We're losing that support now. But price, it would have been better for the bears once we lost that support on my oscillator. It would have been better for the bears if they would continue to lower and fill this gap and then made bulls rally. That would have been better than keeping this, let buyers keeping that gap open, because that's a threat there, right? So what if the market continues to move sideways? Let's just say market kind of gets up here and fill this gap on Monday and then pulls back and then moves sideways for, I don't know, a day or two like this, right? Above my midterm moving average. And then this thing, in that process, you know, my oscillator goes all the way back down to over soul level, right? So the oscillator has completely reset, completely rested while the price hung around on top of the support. Well, that's bullish because now bulls have all the energy. We came to a conclusion on Monday that bulls were tired, right? Didn't we? We said bulls are tired. So we want to see bulls are hanging around, right? You guys remember that? Just holding up while the oscillator reset, right? Still, again, it would have been much, much better if bulls found support here. Now that we lost that support, it got a long way down. Potentially, this could be the next support right here. This one. But there's a lot of room to the downside. That means now bulls have to really, really hold on for much, much longer. And make sure this gap doesn't get filled. Bears, obviously, keep this gap open. That down gap was open from this morning. Keep that gap open. Keep pressuring it. Fill this gap at least. Don't dossel around with it. You know what I mean? Don't play around. Fill that gap as quickly as possible. So bulls can bring it up using this buying pressure. Or best yet, come down, gap it down, make this an island top. If we see an island top, this thing gapping down below 328 sometime next week, you're going to see this thing tanking and making lower lows. And this thing is going to come back down. So let's say we see that island top, price comes down, gap it down next day, we tank, right? And continue lower. What's going to happen is the oscillators will tank, and then oscillators will initially bounce, price will bounce, come right back down, and then that's how the market is going to make lower lows and lower highs. So that's not what bulls want to see. So we are still right on that juncture. We're still at that make or break level. Still make or break level. But I still, despite the fact that we have the oscillators breaking down, you know, we see that gap, but because we're trying to buy, I see that buyers are trying to hold this today, right? It would have been different. If I saw this gap closed, I would have said either neutral or neutral to bearish in the short term. But I still want to label it short-term bullish, but mid-term neutral to bearish. Why am I neutral to bearish in the mid-term? Because we talked about it every single day this week. We're still in the vicinity of lower high. All right? That's why. That's why. We need to get up and make equal highs, and then maybe pull back, and then gets up, something like that, before I can, you know, label this market mid-term bullish, right? So let's kind of flip back to the daily chart and then see what we can figure out going into next week. So looking at the daily chart, you know, looks like this was that support, right? That's the rising support there. That's the June lows. That's where we're finding support currently. It attempted last night, you know, to stay above my short-term moving average on my, this is daily chart now that you're looking at, and then we're falling back. Here's a couple things we can kind of expect. So I said this before, when you're analyzing 65-minute and the daily, there's always a different sentiment. Like when you're, you know, analyzing 65-minute, the daily, the weekly, the monthly, the quarterly, the yearly, you got to understand how they all work. They're all going to work a little bit differently, right? So when I look at the daily, I'm kind of looking at more of a longer term picture. So when I look at this, if this thing comes down, let's say it comes down to near to the lows here, 322, there's a chance we might find support here, some kind of double bottom, because that's what we saw in June. You see that? And when you look at the daily, you can see we're still in the zone, in that higher low zone, right? Those are higher lows and higher highs, correct? So when you look at the daily chart, well, we're still in the bullish zone in the longer term picture, looking at this as a whole thing here, right? That low is higher than this low. So what I could see is if we do lose my midterm moving average there, right? That midterm moving average has been on the money since April. We lost it briefly. We got back up. We're retesting it now. Even if we do come back down, I could see, you know, we're finding support in that vicinity right here and potentially making a double bottom, right? So that will be kind of important support going forward. So we got the horizontal pivot, right? That's important pivot there, right? That was the last time in February. Once we lost that, that thing tanked, right? That was March with the COVID. And we came all the way up to 320 in June, and we saw 8% correction. And we made all the way back up to new all-time highs, and we're back at it. So 320 is a very psychological number. A lot of people remember this number, right? They remembered it back in February because that's where it's gap down level after COVID. We remember it in June because after a big run, we saw very fast decline in 2 days. And we finally broke above it, and then this went to 360. So once we broke above 320, it went to 360. And then we're back at 320. So that's pretty important pivot. That's pretty important support. So I wouldn't be surprised if we do see continuation to the downside. I could see 322 at least acting as pretty strong support, initially bouncing. I'm not saying, you know, I would have to re-examine the situation when we get there. Either seeing, you know what I mean, bounces up, or we bounce a little bit and then pull right back down. Again, it's tough to say as of today because we may bounce from here, right? So looking at the daily, there's another thing that I want to show you is that, here, I'll show you something real quick. You see my long-term moving averages? Do you see this kind of a thin, I mean, they're not thin, but they're like a little bit faded color, right? That bluish, thicker moving average. And then like pinkish, thicker moving average. So that you can see here is very, very similar to what we're seeing, what we saw in 2019. That right here, you see that? You see how those two moving averages crossing up. Do you see it right there? They're crossing up. That's what you call golden cross, right? And that's what you see, a golden cross. And the golden cross is not useful if you want to try to figure out what the market is going to do tomorrow or not even next week. Sometimes not even for weeks. But these moving averages are long-term moving averages. When you have my long-term moving averages crossing up like that, and especially when the market made a higher high back in September, that is a good sign for the long term. Does not mean it cannot come back down and retest some of these levels, because it looks like we did in 2019, right? But in the long term of things, we did finally broke out, and market did make a good run to the upside. So that, looking at that golden cross, it's bullish long term. But I think the short term of things, more people are worried about, I think most people are worried about what's going to happen with the election. Maybe also with the COVID second wave. And also, I think a lot of people are worried about how a lot of these tech stocks just are very, very extremely extended. A lot of people are talking about this is kind of like the valuations on these tech stocks are similar to, 2000 dot-com bubble. So I think those three things are what making a lot of people very nervous, especially the election coming up. Seasonality-wise, October usually is a tumbling month, especially when the election is on its way. And I think all of that is making people jittery, skittish, kind of anxious about, aren't we going to see maybe a more pullback, or maybe we're just going to continue grind lower throughout the entire month until the resolution of the election. And that might be true, but that's just speculating, right? We're just kind of guessing. That's why it is very important, it is imperative that we want to study the price, because price will let us know. right? Price is always the king. We get paid by the price and its movement, not by speculating, what the market should do, what market shouldn't be, but what is important is what market is doing. And that's what we're doing, and that's what I've been doing with you guys, analyzing this market every single day, understanding what the market is doing, never speculating because of the election, because of COVID, or because of potentially .com bubble crash. You know what I mean? So I think looking at the daily, it's more bullish look. And because of the fact that even if this thing comes down here, that I think 322 is still pretty decent support level. So I think next week, next Friday, we'll come and see where the price is at. It might be here at 322. Maybe we're up here. We don't know as of now, but we are, as of today, as of this moment, with the data that is at hand, it's trying really hard to stay up to some of these moving averages here, right? So I still want to give benefit of the doubt to the buyers, looking more bullish as I analyze on the daily chart. Let's go to Qs. So actually, when I go to Qs and go to 65-minute chart on the Qs, we actually did have textbook island bottom reversal on the Qs, not on the S&P, but we did on the Qs. This is NASDAQ. Not only that, NASDAQ looks more bullish than S&P, because we talked about on the S&P how S&P is on a lower high vicinity. Well, on the NASDAQ, we're actually in equal high, right? That high and this high is equal level. So overall, looking at this 65-minute chart on the NASDAQ, now we're getting into neutral ground. We're no longer in that lower high, lower low ground. We're no longer in a downtrend, a midterm on the NASDAQ. It is on S&P, not on the NASDAQ. So we are already neutralized that downtrend on the NASDAQ, made equal high here, pulling back, perfectly normal, because that's what a lot of times stocks or indices do, make equal highs, neutralize a downtrend threat, comes down. And why does the market comes down? To cultivate higher low. That's a low, potentially cultivate higher low here. I'm not sure if it's going to be here or here, and then make higher high and break out. So NASDAQ does look more bullish. And a lot of times people think, well, because NASDAQ made such a great move, that's an 85% move, almost 85% move, since the March lows. And that's some fast move that we've just witnessed that this market produced. And then a lot of people think, well, yeah, market move up that much, well, it's not going to end well. It's actually, that statement is not correct historically speaking. If you're only looking at a 2000 .com crash, yes. But any other times, when you see index or stock just moves up quite a bit, especially index is more adamant than stocks, because some stocks can make a big move and actually can crash like 50%. But NASDAQ, the index, just because it's average of all these different stocks, it will be much more adamant. Because the market likes to fool the majority all the time, right? And most people are expecting to see much bigger decline, and a lot of times those people are what? Missed out on this move, or maybe they prematurely closed out, or they were cash and they want to put that cash into work, but it's very difficult to start going long after only this amount of pullback. They want to see some steep correction, and they're probably looking at somewhere here 237 on the Qs, because, well, that's the prior peak before the COVID. So they're like, okay, this makes sense right here. And that's a very, very prominent and obvious level, right? Very conspicuous. And a lot of times when market know that a lot of buying orders in that vicinity around 236, 237, market likes to either bounce early or late, right? I think I touched this before. Market likes to bounce early or late. And there are times where market will bounce at an obvious level also, right? That's an obvious level where everybody's looking at. That's the early bounce. That's a late bounce. More often than not, market will bounce early or late. Why does this market do that? So either market is going to make sure you're not on the train before it goes right back up. So you got to FOMO later. Or if you're patiently waiting and you got in, at that ideal, obvious level, and then you're like, what's going to happen is usually what happens is market initially bounce at an obvious level and start bouncing, right? And then people just start jumping in hard. Like they probably go all in long, just putting all their cash into work. And then this market gives you another plunge just to rattle them out and then bounces late. That's why. But I've seen where market does bounce in a very ideal level. I've seen that. But if you study history and the price action, more often than not, it's going to bounce early or late. So the biggest question is, and here's a support that I see right now. This is a current support right there. So it's coming actually from this peak, right? And that's an early level of support. A lot of people are looking for bigger pullback. That's early level support. And a lot of people are looking for the early pullback. I mean, bigger, steeper pullback, right? Because think about after you missed out 85% run, it doesn't feel like that's enough pullback for you to just go, putting your money, all your cash into go long. Maybe you nibble it a little bit, but nothing heavy. That's what most people are thinking. And so market is going to do something to fool the majority. So like I said, either it's going to bounce early or an ideal level or late. Usually it's either early or late is the one that how the market is going to bounce. And I cannot tell you, nobody can, which one is going to be. Because if I could tell you, if I could tell you exactly where it's going to be, well, I'll be billionaire by now. Though Warren Buffett never, he says nobody can, Warren Buffett, who's a billionaire in the stock market, said that nobody can time the market. Nobody can time the market. You will go broke trying to time the market. And I agree with it. You will go broke trying to time the market. And you say, well, then how can we, be part of this market? So you have to have certain type of strategy to deal with this kind of market, right? Strategy that, well, there's potentially be a, we may actually bounce here and continue higher, make new all-time highs. And you got to have certain tactical stance to deal with that, and you'll be okay this market bouncing here and continuing higher so that you won't miss out. It's better to maybe get in than trying to FOMO later, because then it might pull back later or something like that, and it gets more costly and a lot of psychological damage potentially get done, because now you're really chasing at the top. Now market is way up, you from here to here. So that's why trying to figure that out, trying to adjust your positions and positioning yourself accordingly, that's the hardest part when it comes to trading and investing, right? That's the hardest part. How much to enter, right? Which stocks to be enter? How, what's your time frame? What kind of strategy are you going to use? How much are you going to be allocated? Are you going to be, because you also have to be ready. If you're going to go long somewhere here, you have to be ready for potentially facing bigger pullback, right? These are the things, important things when it comes to trading, but a lot of people don't focus on that, and they just want to time it perfectly, the lows and highs, and that's how you're going to go broke. So for me to recap everything that I've talked about, it's not easy level. I think if there's a good chance we make new all-time highs here, but if we do, I don't know if can go another huge move. Obviously, it's a possibility, but just because we made such a good move already, I think there's a good chance we make new all-time highs. I think a lot of people might FOMO back up here, you know, and then market is going to punish those chasers, pull back, and may do something like this before, you know what I mean, before market is ready for another leg run higher. And that's kind of what I was saying also back in, you know, September, that's what might happen. Because obviously we know that market doesn't go straight up all the time. It's gonna have to rest after a while, right? Let's go to Vixx. So Vixx popped a little bit, and we've been tracking my midterm moving average along with the Vixx, and you can see how Vixx been just hanging around, you know, not getting lower than that. That might be, you know, doesn't always mean, because we saw something like that here in June. We held there for a little bit, and inevitably we did break below it. So just because it's holding up doesn't mean it has to get up. We're just, again, the whole market is just kind of like, what? There's a lot of anticipation, like, what is this market gonna do? Is index finally gonna lose this level and tank? Is the market finally get back to all-time highs? So there's a lot of anticipations. Market is gonna make sure, you know, to continue to make you guess every single day. And then one day, boom, everything's gonna happen and everything's clear. And when everything's clear, everybody's too late. Either short position or long position. Market is really, really good at that. So you have to prepare before market either breaks out to the upside or break down to the downside. Once the market gives you that clear look, it's too late. You know what I'm saying? Let's go GLD here. So GLD is made a little move, but I think a little bit of problem that we have on GLD is that that's level been a support before for a while, pretty much since March. We kind of retesting it as potential resistance. So it's a vulnerable look here on gold, and we got my short-term moving average coming down. So what bulls want to see is this thing going up, pulling back, and then rewriting that midterm moving average, and then make a move like that. If we lose it, things could get hectic here. But though my long-term moving average is, where's my other one? Okay, my long-term moving average here, so that might be my next support. But I would love to see gold coming down to about 162 or something like that. Let me see. Let me put a fib there. Yeah, I'd like to see about 165, you know, or 158, I think. But it's the same psychology here. Gold made us such a great run. A lot of people missed out. People want to see gold pulling back to accumulate. Is it going to bounce early? Maybe right here on that long-term moving. That will be kind of considered bouncing early. And that will be bouncing late, 152. An ideal level is, I think, 165 that everybody's looking at. So you kind of got that idea here. Let's go to Grayscale Bitcoin. I'll let you guys go with this. So we talked about how market actually broke below it, but this gap still remains open right here. We got this gap, and that's what we found support long, lower wick there. So my short-term, mid-term moving average is crossing to the downside. It's been acting as resistance here and here. So technically, we are bearish short-term on Grayscale Bitcoin. In the mid-term, we're more neutral. In the longer-term sense, we're still in the vicinity of higher low, despite the fact that we broke below this trend, uptrend. So if Bitcoin want to make this into some kind of a trap, right? All the stops gets taken out. This is kind of obvious, that prominent support that everybody was drawing. Bitcoin want to make sure take all the stops here. Maybe even come down, fill this gap. Will be better if the gap doesn't get filled. And if this thing gets back up above these moving averages, there's a good chance Bitcoin will get back up and fill this gap here. So Bitcoin bulls want to make sure this gap remains open. Worst case scenario, it needs to be stay above 844, that gap area. But we're holding up above 10, and we also hold up this gap, 2 gaps here. So that's a good sign. But we also got down gaps here. So again, Bitcoin is also right in that area. We're like, what is going to happen, right? So So yeah, overall, Bitcoin, gold, and the equity market kind of all in that area where like, okay, is this the level the market is going to get back up to all-time highs now? Or with the seasonality and the election and tech stocks being super extended, are we going to see some much sharp pullback, you know, shaking a lot of people out, the newcomers, those Robin Hooders, right? They don't know what they're doing. They just want to buy it. They just want to buy everything, right? So we're going to punish those people. It's, as of today, it's tough to say. But I tell you what, I'm leaning more bullish. Just because what the price action is as of today. Things can change and it can escalate going into next week. But for now, as of this moment, I'm more favoring the buyers at this point. And let's see. But this is a make or break level. Buyers must see, we need to see more from the buyers. But at the same time, if we lose 3022 and this rising option support, if we lose it below, there's a good chance 300, 310 is a possibility. 300, 310. So, but we're up. We're staying up. We're holding up above these levels. So I want to give benefit of the doubt to the buyers overall when I look at the daily chart. When I look at the daily chart. Short-term things, I said it in earlier of this video, right? Short-term bullish, mid-term, kind of neutral to bearish, right? That's when I'm looking at 65-minute chart, looking at things more shorter term. But overall, for now, as of today, I want to lean towards bullish side. Hope that it's never black and white, it's always going to be kind of ambiguous a little bit, especially when we're kind of right in that zone. And that's what makes this market beautiful, I think, and as we grow to become better trader and investor, nobody can know for certain the direction, but we can able to gauge that probability and we can kind of refine that strategy, right? And that's what we're trying to do here. You guys enjoy your weekend. And good luck trading next week.